In today's video, I want to walk you through exactly what this jobs report said and what this Nvidia news was and why it's impacting crypto how it is. And then at the end of the video, I'm going to give you a little bit of a warning because of what we're seeing from the liquidation maps right now. So we have a good bit to get into today, so I hope you all are having a fantastic day. And before we do get into the video, I will remind you that if you know what you are doing, if you are not a beginner, but you know what you are doing, you can check out the link to BTCC down below, and you're going to get up to $10,000 in bonuses and rewards if you sign up with my link and start trading today. It's where I personally do all of my trading. I think you guys will enjoy it. But again, if you're a beginner, avoid this like the plague. You should not be leverage trading. This is not for you. But anyway, with that in mind, let's go ahead and let's get into it. So the big piece of news from the last 12 hours was the fact that Nvidia just absolutely smashed their quarter 3 earnings with, of course, their estimates for sales on AI chips absolutely off the charts. Now, I know many of you are going to wonder, Tyler, why in the world would we in crypto even care about Nvidia? And you actually should. The reason why I say that is because Nvidia is basically the top. It's the very top of the pyramid of this huge AI bubble that there's been recently. And the AI bubble is probably one of the most speculative bubbles that's ever appeared in all of traditional finance and even untraditional finance. It is very, very, very speculative, but it's also very important. Now, I'm under the belief, and so are many other analysts, that the AI bubble and crypto actually have a lot of ties to each other because they're both just considered speculative assets. Like Nvidia, in many ways, is still considered a speculative asset, even though it's as big as it is, because the whole AI thing is just new, right? And so when people think of AI, sometimes they think of crypto. When people think of crypto, they think of AI. But all in all, the reason why it's important is because these two asset classes have a lot of close ties with each other. I mean, just look at many of the most popular cryptos from the last year or two. Many of them have been AI-based cryptos. And so knowing the speculative nature, or just kind of considering the speculative nature of both of these asset classes, they tend to move together. When crypto is doing well, so is the AI niche. And when the AI niche is doing well, crypto usually does pretty good. So in a moment like this, where the leader of the AI wave does really good, and it shows that this bubble is not about to pop, it's a good thing for crypto as well, because people will continue to feel a little bit more risk on and be willing to take more speculative bets. Now, recently, there were rumblings and a lot of people were getting concerned that this whole AI bubble was about to pop. And what was interesting was that as a result of people thinking that this AI bubble was about to pop, we actually started to notice AI stocks and AI companies underperforming for the last couple weeks, which also had a direct impact on the crypto market as well. So it's like people are just tying these two things together. And should they? I don't particularly think so. I think they're rather different, but it's just what the market does. And so you have to pay attention to it. So in a moment like this, where you do see, of course, Nvidia doing really well, it's a good thing for crypto. Now, in addition to that, what we saw this morning was an interesting jobs report. So for payrolls, we actually saw plus 119,000 jobs in September versus the 50,000 that was expected. This is actually a really good number for people in general, right? It's a really good sign for jobs. It absolutely outpaced expectations. But what was most important was the fact that the unemployment rate went to 4.4%, which was an uptick from August. Now, you may think, Tyler, why is that important, first of all? And second of all, isn't that a bad thing that unemployment is going up? And in general, yes, you don't want to see more and more people becoming unemployed. But if you flip the script, whenever you think about this from an investment perspective, if unemployment is continuously ticking up, right, the Fed is going to have to continue to cut interest rates, right? And they've made this very, very clear. They said the jobs market alone is what we're now targeting now that inflation is getting closer to our target goal. And so they're targeting things like unemployment. They need that to come back down. They can't have unemployment just running rampant. That's really bad, right? And many would say that's just as bad or worse than inflation running. And so because of that, knowing that unemployment is still ticking upwards, it means that the likelihood is that they're going to continue to cut interest rates for the macro, right? Maybe not in December, but the likelihood is that you go into January, February, March, April, May, you're probably going to be seeing those interest rates coming, and they're probably going to come with force until they can get unemployment under control. And so the fact that we are seeing the jobs market still looking a little bit shaky in some areas means that the Fed is very likely going to have to continue to take restraint and constraint off of the economy itself and the capital of the economy itself and the liquidity of the economy itself, which is a net positive for crypto, right? And so, yeah, it is a little sucky, obviously, to see the amount of people becoming unemployed going up. That's never a good thing, but there is a silver lining there, being that interest rate cuts should still be able, still should be coming, which obviously is naturally good for crypto. It opens up more capital. It's good for liquidity here in crypto. So because of both of these two things, the Nvidia report and the jobs report, all contributing in their own different ways to the crypto market, the crypto market's been looking a little bit decent today. I'm not going to go as far as to say good, but it has been looking decent. Now, the stock market, on the other hand, this has been looking pretty good. I mean, you look at the S&P 500 up 1.6% today, and if you don't know anything about stocks, guys, a 1% gain in the stock market's really good, okay? The Dow's looking pretty good as of now. The the Nasdaq's looking pretty good, is now up 2%, and this may not last very long, right? Like this, by the time I upload this video, this may have come back down, but all in all, this is pretty good news from the macro. This isn't a big deal for right now. Like, I don't think this is a major impacting factor that's going to pump crypto to an all-time high right now, but over the next 6 to 12 months, these sorts of things will contribute to this market moving in a bit of a better direction, which is again why you are seeing the crypto market trying to recover a little bit right now. Now, it is the case that the crypto market is trying to recover right now. I will definitely say that. For example, we saw Bitcoin's price fall all the way down to $88,600 and is now trying to recover, at one point actually pushing all the way back up to $93,000. So yeah, it is actually very good that we are seeing this recovery. And I am seeing a lot of people on crypto crypto Twitter getting very ahead of themselves. You know, I'm seeing everyone on crypto Twitter, we're back, the bottom is in, Nvidia, jobs reports, pump, all this. Great. I love the bullishness. I love the hopium. I'm a hopium guy myself. But at the end of the day, I want you all to be incredibly careful, because just because the market is recovering right now doesn't mean it's anything more than just a good sign. That's all this is. The fact that Bitcoin is attempting to recover right now, as it did just hit this macro golden zone, which is a key zone of support we identified about a week ago, although this is a good thing, all it is a good sign. This is not a confirmation that the market is about to recover. This is not even a signal that the market is about to recover yet. It's just a good sign. It's a very good sign, but it's just a good sign, okay? And I just want to make that clear, because if we go look at what's happening on the liquidation maps, things are getting a little bit weird to the bottom side. Yes, there are still a lot of liquidations above us, and I do believe at some point we're absolutely going to try to wipe out some of these liquidations. I think some of these short traders are going to get destroyed here on the 30-day and also here on the 7-day. Look at this grouping of short traders to be liquidated if we go back up to, say, $97,000. So yeah, I still do believe we're going to get recoveries and relief rallies pushing back up and liquidating these traders. But in the same breath, you got to consider what's happening to the downside, because just in the last 12 hours, as a result of this little bitty pump we're seeing, we've now seen a nearly $3 billion worth of liquidations enter into the bottom side, meaning that if we just go back to where we were, there will be about $3 billion worth of liquidations. And that's not a hard move to make. Bitcoin's price doing this, guys, is not very difficult. And the fact that all it needs to do is that in order to liquidate $3 billion worth of traders who are betting long that the market's going to go up, yeah, you should be a little concerned by that. So yes, it is a good thing that Bitcoin is trying to build some support right here. Yes, this could be the beginning of some sort of reversal towards the upside that pushes us back to $100,000 or $108,000. Yeah, all those things could be true. It's not confirmed yet. So don't get too far ahead of yourselves right now. I wouldn't be opening up massive leverage long positions or anything like that. If I was going long and leverage, I'll be opening up a leverage long trade with the stop loss set around $87,500, which gives us a little bit of wiggle room just in case they want to go for those 7-day liquidations. And I would be doing that on very small margin and very small leverage. I don't think it's a terrible idea to be going long here, but I wouldn't be doing it on big leverage that could get you liquidated in any capacity, because a pullback to where we were yesterday is very easy. Okay, it would be very easy for that to happen. So yes, this is a good sign, but no, you should not get too far ahead of yourself right now and start betting the house that crypto is about to start pumping. I think continuing the dollar cost averages is cool. I think that's totally fine. As a matter of fact, I did a dollar cost average myself just a couple days ago when Bitcoin's at $90,000. So I see no reason with that, but please don't get too far ahead of yourselves. This does not mean that Bitcoin's about to immediately recover to an all-time high. Okay, so that's kind of where we are. That's kind of what happened. That's the news, and that's the warning I wanted to issue. Let's just take this bite by bite, day by day, and kind of go with the flow of the market, right? And we'll see how things go. Oh, also, guys, I almost forgot to mention before we wrap up this video, if you do want this entire strategy, which shows exactly where I'm going to be buying and where I'm going to be taking profits moving forward, if we are entering into a bear market, I'm not saying we are, but if we are entering into a bear market, if you want access to this entire strategy, my thesis, my reasoning, my portfolio structure, and all that stuff, head to the link down below, enter in your information, and I'll send you an email with the link to the document that basically just outlines everything. Exactly where I'm buying and what I'm buying and how much I'm buying and all that sort of stuff. So if you want this whole strategy broken down in a very simple form, head to the link down below and go get that email sent to you. Okay, you'll enter in your information and we're going to send it to you. So make sure you check your email, make sure you check your spam. Okay, so that's kind of where we are. That's the news. That's what's happening in the market, and that's the warning. So I think that's about everything I want to cover for you all today. So please just be very careful, and I'll be here with you every step of the way. Talk to you later, everybody.